I would imagine that if India were to really grow fast and generate the kind of jobs that its people need, we also will need to push up our investment rate in one place. But we are not a directed economy where the government can wave a wand and investment will take place. So, what are the kind of policies that India should follow to ensure that we have the kind of investment and the growth and the job creation that we need?
I mean, I think, first of all, to start out, I think, the potential for India's economy to continue to grow at high and sustainable levels are very good. But as you highlight, the key is to eliminate some of the bottlenecks. And as a matter of fact, we presented a regional economic outlook in November 2019 in Delhi, where we kind of highlighted some of the issues that need to be addressed. And I think, forgetting about the COVID shock, all of these issues are still relevant. And I think you already highlighted a few of them. Critically important is the financial system, correct? Because in order to channel scarce savings to the most productive part of the economy, you need a functional financial system. And so anything that strengthens, as you pointed out, recapitalization, for example, is critically important. But the flip side of this, and I think this is, of course, where the COVID shock maybe amplified the challenges, is the corporate sector. Some of the corporates have high debt levels, so these need to be sorted out, resolved. And for that, you need to continue on strengthening the frameworks to deal with bankruptcies, maybe out of court resolution, especially for small and medium enterprises. Because again, as long as companies are saddled with high levels of debt, they're not going to operate as efficiently as they could. And then the last point that you're making, there is, of course, a big role for government also to play, and through public infrastructure investment. I think the beauty about public infrastructure investment in the current context is it does two things. On the one hand, it can be another boost for the economy, sort of like this short-term cyclical part, but it ultimately then overcomes bottlenecks. And I think here, in a context of, there's only so much fiscal space the country has, I think the idea to look at the portfolio of assets that the government owns and maybe to restructure it, I think that's what you were alluding to as well. I think it's quite important. There are certain things that the Indian government has on its balance sheet that it owns that could probably easily be done by the private sector. So commercially viable companies can be divested, can be passed on to the private sector. And that would then allow you and give you the space to strengthen your public investment, where maybe the private sector is a little bit more reluctant to investing. So it is sort of like a change in the composition of assets, and that could be quite useful in the current context. But I think the emphasis on public infrastructure investment is critically important to overcome the bottlenecks and then to facilitate the operation of the private sector.
Fintech is likely to play a huge role in allowing people who cannot access formal credit today to be assessed and their credit worthiness ascertained and to be made eligible for credit. So I think while a body like the IMF is not really bothered about individual credit and the systems of accessing individual credit histories, since they aggregate to a very large proportion of the total credit and the monetary system of a country, perhaps you should take a look at how fintech has a potential to transform the way banking systems work in emerging countries like India.
No, again, I think your point is very well taken. And here, I think if you look across the world, you have India and other countries, it seems that some of the developing and emerging markets are almost ahead of some of the advanced economies in the use of fintech technology, and have been leapfrogging and mobilizing resources that way. I think your point is very well taken that the problem, I think, in developing countries in general is that information is costly, scarce, and when you are in the financial system, whether you're a banker or in capital markets, you need to have information about the quality of the project investment and the behavior of your consumers. Now, traditionally, banks have a comparative advantage, overcoming what we call asymmetric information. I think fintech here can play a critical role to do credit assessment in real time and can really be a game changer. I think the key here is to ensure that as the industry continues to advance, that the regulation and frameworks are also strengthened at the same time, because you don't want to have any hiccups going down the road. Again, I think here India is an example, and we've seen that also. I think when it comes to technology, even in the context of the crisis, what is it that we have learned? And that is that actually governments can mobilize technology to get resources very efficiently to those who need it the most. So this is, I think, actually one of the lessons from the crisis, that there are significant benefits to rely on the technology, and that is probably where more could be done. Or if you come to technology, another example is, e-filing of tax returns. Again, you don't have to go and do it in a physical form. But yeah, coming back to the financial system, I think there's a lot of scope to bring the informal sector into something that is more formalized. Fintech can play an important role. It allows asymmetric information to be overcome. The key, of course, is, like with any financial innovation, you have to make sure that the regulation also keeps up, so that down the road there is no fraud, and that people suddenly lose confidence. And I think that's what you were talking about in the first place.